Hello everyone and welcome back to the channel. Guys, in this video I'm going to explain to you a few things that I think everyone should take into consideration before selling short put options, okay? And when I say short put options, I'm pretty much including here three short put options. One is just naked puts. You just trading naked puts on portfolio margin, cash account, whatever you have. The second one, you're trading here short put options to get into different strategy, like the covered strong, or maybe the wheel, or maybe the get a sign and transform into a covered call, or maybe you just want to get a sign and buy the stock at cheaper price. Okay, so basically those three things that we're gonna cover in this video. Why? Because I hear so many people saying that selling options, especially puts, it is very dangerous, guys. It is one of the most safest strategy you can ever find when it comes to trading options. Okay, why? Because look at this. Let's say, for example, you own stocks XYZ and you bought for $100. If that stock tank 10%, guess what? You're losing here $10 per share. Okay, if you have here, let's say, for example, let's say 100 shares with the stock trading $100, you have here basically $10,000 in stocks. Okay, in this case here, if this thing tank 10%, you're losing here $1,000. Okay, but what you can do is, instead buying the stock at $100, you can go here 10% out of the money below the current stock price of 100 and sell a put option here to eventually buy the stock at $90 and at the same time collecting some premium. So basically, for you to start losing money, it's going to be this $90 here minus this P here, which is the premium. If you collect here, let's say $2, your break even, it's $80. So when the stock drops 12%, someone will be losing 1,200 on 100 shares, and you haven't lost anything yet. So cash secure puts, it is one of the most safe strategy out there. Okay, the key takeaways of this video, of course, selling puts to generate income. In other words, covered strong, the wheel strategy, covered call, or just naked put itself. And the second one, of course, expose ourselves to volatility. Why? Because when we sell options, volatility, it is the best thing we can have. We live and breathe volatility every single day as an option seller. And if you know how to trade, especially when it comes to position size, you should be praying for high volatility every single day. Very, very crucial. One thing that people always complain, but cash secure puts can tie up a lot of capital. Guys, if you have a cash account, if you have a small account, it is what it is, but at least you know exactly how much you're gonna lose. You don't have the problem to the margin get expanding and losing more than you should. So there's the pro and there's the cons as well when it comes to tying up some capital when it comes to trading short put. Okay, in my case, if you have a small account and if you do a cash account, okay, even if you have a large one but you want to stick with your cash account, great. When it comes to manage risk, if you are newbie when it comes to trading options, it's even better. There's nothing wrong with that. Okay, and of course, one of the main things, selling put option on stocks that we want to buy. Okay, in this case here, for example, you want to buy Amazon, but you don't want to pay the market price. We're going to start with a cash secure put option. But again, I always mention this in my channel. For those of you that haven't never ever pressed the trigger when it comes to sell put options, stick, guys, with the ETFs. Because if the market drop to more 30%, 40%, at least you know the SPY ain't gonna go to zero. But what if the SPY goes to zero? If the SPY goes to zero, we're gonna have way more things important to concern than our trades. Okay, and of course, picking our delta, which I'm gonna explain to you guys how you're gonna use moneyness to pick your deltas. Okay, and for those of you that are watching this presentation, I'm going to make this both PDF here or Word document available to you guys, because on this one here we have the whole thing here laid out for you guys. Okay, so you can download this for free. Of course, use at your own risk. This is kind of what I use for my own trades. I tweak a little bit sometimes because, of course, the markets pretty much change on a daily basis. This is not 100% mechanical because guess what? The market is not 100% mechanical. It's impossible. Okay, it's impossible. You have to go with whatever the Mr. Market is giving to you. Sometimes he's giving to us high volatility. Sometimes he's giving to us lower volatility. We need to learn how we can adapt on every single kind of environment. If you don't know, guys, what this chart means, okay, do not trade options. Okay, if you don't know what this means, what I'm drawing here right now, don't even bother to trade options. If you don't know what the normal distribution is of a chart, okay, guys, not a chance. Because the thing is, okay, the thing is, on high volatility environment, high implied volatility, whatever, we can collect $1 and put our strike price all the way here, okay, all the way here on this curve. Okay, way outside of this bell curve here, as you guys can see. Okay, we can put here our strike price here on the end of this curve. Okay, on the very end of the tail of this curve. Or sometimes on lower volatility, we're gonna have to collect $1 to put our strike price all the way here. Let's say this thing here is our stock price. This might be, let's say, 2% out of the money. This might be, okay, maybe 3% out of the money. But this here might be, well, maybe 6% out of the money. Here you collect $1. Here you also collect $1. Here we also collect $1. But guess what? We are trading here on high volatility, medium range volatility, and this is very low volatility. Are we going to stop trading here? Absolutely not. We're going to adapt ourselves. You can do a mechanical trading plan. There's nothing wrong with that. Like I have here, for example, okay? To a certain degree, to a certain point, you need to go with whatever the Mr. Market throw on you, because that's the way it is, okay? And of course, and managing your trades. Because like I always say to everyone, you're only good as your trade management, okay? And sorry for all the scribble the mess on the screen, guys, but that's the way it is, okay? Most of the thing that I'm talking here right now is the top of my head, because I've been using for a long time. I don't need a fully PowerPoint just to repeat to you guys what's on the screen. You guys can read for yourself. That's no point, okay? But trade management, it is very crucial that you do understand, okay? Because what's gonna make you profitable, it is how to manage your losing trades. Because remember, put a put option, going to a trading platform like TastyWorks and pressing the trigger, anyone can do. But let's say 50% goes, okay, out of the money and 50% goes in the money. This thing here will take care of themselves. This, anyone can make money, even a monkey, okay? But this thing here, trade management, it is what's going to make you profitable, because this thing here is make or break. This can make you lose a lot of money, or this can also help you to make a lot of money. And this will help me make almost 500,000 last year trading option. Why? Because all the bad trades that I had, between quotes, not bad, trades that went in the money, like Meta Platform, Nvidia, Amazon, Google, what I was doing is I was turning a cash secure put into a covered strangle, a covered strangle into a covered call into a long-term investing. And thank you very much. It made me like 300%, 200%. Okay? Why? Trading management. Very crucial that you guys do understand. Okay? And what else? And of course, this one here. Because we can collect premium, we can lower our base cost. We don't need to buy the stock straight away. We don't need to take assignment. We can unassign ourselves, okay? Unassign ourselves. In other words, you can buy or sell your shares, and at the same time, you can sell one short put here. You can unassign yourself, and same time, maybe collect premium if your trade is not too deep in the money. Okay, and sometimes you can take a little bit more risk. You can pretty much add more contracts here. Why? Because you want to buy 200 shares anyway. We don't have just 100 shares. We are allowed to sell here another put, or maybe 2 puts, because we are comfortable holding 3 short puts, 5 short puts, or maybe 10 short puts on a stock that we can afford to have 1,000 shares, 500 shares, or 300 shares. Because remember, one option contract, one short put contract make you, or in other words, you'll be obligated to buy 100 shares of whatever stock secure it might be. Okay, don't forget that. And if you sell at $100 and the stock drop to 50, you have to pay for 100. So you'll be losing here, what, 50%. Okay, don't forget about that, okay? So the first thing, guys, it is a definition of a put option. It's very, very simple, okay? Basically, okay, we have the stock here trading at $100, okay? What we're gonna do is, okay, we are going to sell a short put option at the lower price here in relation to the stock price. Let's say 100. You're gonna sell here, like I showed you guys before, at $90. And we will be obligated, if the stock goes down to 60, or maybe let's say 80 or 70, 60, or even to zero, we have to pay $90. That's why some people think, oh, selling put option is very dangerous because it's unlimited loss. No, it's not. This is not true. Your short put option has a limited loss, which it is zero. If you sell a put option here, a short put option on a strike price of $90, and you pay, let's say, you collect, let's say, $1 here, for example. So your maximum loss is gonna be 90 minus 1, which is gonna be 89. Your maximum loss is gonna be 89 times $100. Your maximum loss in this trade, if it goes to zero, it's $8,900. That's it. It's capped. You know you can lose $8,900. But of course, we are going to trade ETFs. We're gonna hold for the long term, and we're gonna do a gazillion of trade management. And until we stress everything, all the chance that we have to get out of the in the money put, or maybe holding the shares the long term, we're never gonna let the Mr. Market to take the money from us. Never, ever, ever, okay? Because we have many goals. We can do as income generation, selling put, keep managing the put, keep rolling the put, keep collecting premium, lowering our base costs forever. Of course, if you go very deep in the money, you might need to add more contracts, okay? Or maybe buy the stock at cheaper price, a discount price, which is one of the best strategy ever. Like I just showed you guys, there's plenty of things, okay? In terms of unlimited loss, that's not true. Unless if you're talking about here, let's say stocks trading at $100, you sell a call option at 110. And you might think, oh, this thing never goes up more than 110. Guys, good luck for you. Look what happened with NVIDIA. Okay, look what happened with Tesla in 2019. People lost, I mean, I don't want to say the word here, right? They lost their back. You know what I mean, talking about selling call option, naked call option on stocks, especially those tech stocks that can go to the moon pretty much. There's people that lost their business, their hedge funds, everything they had selling naked call options. Naked call options supposed to be illegal for people to use. Because those people that know how to use, great. But those people that doesn't know, they always lose money. We're not talking about here naked call option. I don't even talk about that in my channel, by the way. I don't even use it. And the only call option that I use is during the wheel strategy and the covered strong. But both it is covered. Okay, so pay attention to that. We're never gonna hear in this channel me talking to you guys to trade naked call option. That's the most. It's just being silly. Okay, there's no reason for us to trade those two strategies whatsoever. Okay, we don't use those strategies in this channel. Another thing as well, of course, people talk about is capital requirement. This is nothing we can do about it, guys. Just open my TastyWorks platform here. So I'm gonna show it to you guys a live trade here on the platform, because this here, it is what it is. There's nothing we can do about it. Okay, nothing you can do about. Or you can do here portfolio margin, so you can have like a margin which is roughly 20% of the amount you require to buy the stocks. If your strike price is 100, your margin required here on a cash account will be like what, $10,000, because it's 100 strike price times 100. So in a portfolio margin, this is gonna be roughly, let's say, $2,000. Okay, it's roughly 20% of your maximum required to buy the stock if you do get assigned. But there's nothing we can do about it, because it is what it is. Let me sign in here on this thing here, because I want to show to you guys some of the stuff, especially when it comes to moneyness, which it is picking our deltas, okay? Which is very, very important. It's gonna be pretty much our next next topic that we're going to cover. So selling puts to on the stocks, and of course compare stocks with the cash secure puts. Guys, look at this for example. Okay, look at this. Okay, let's say John has one share of whatever stock, let's say worth $100. Okay, John bought a share of stock XYZ, PDT, whatever, on $100. Mr. Mac, whatever it is, sold a put option here at $90. Okay, if the stock goes up, great, John is making money. But this is the best case scenario. You should always look at the worst case scenario, because the best case scenario, guys, anyone can make money. But what about the worst case scenario? Can anyone make money? Probably not. But this person here, okay, that's selling puts here, and this is just compare short put against the shares. It's not even the covered triangle and the wheel strategy, which it's even better. This person here, guys, if the stock doesn't move for the whole year, and this person here keeps selling monthly premium on an annualized base, let's say 12 trades per year, and if the stock goes to 105, 101, 95, 98, and if it stops, let's say at $101, this person here is gonna make $1. This person here, guys, made at least, let's say $10. But of course, this is one share of $100. If you multiply this by 100, okay, this person here didn't make $1. This person made $100, but this person here made $1,000. That's how powerful it is. Okay, that's how powerful it is selling put or short put options, especially cash secure puts on stocks or maybe ETFs that pretty much trade sideways. And what reminds you guys? IWM, one of the best ETFs when it comes to trade cash secure puts. Why? Because it trades sideways a lot. I don't know if I have the chart here, but let me see if I can get the chart of IWM so I can show you guys. Let me see if I have here, because in my point of view, guys, it is one of the best ETFs to trade the wheel strategy. Let me see. Here we go. Let me see if we're gonna be able to show this to you guys. Let me go back here. Trading view. Yes, here we go. Look at this. Okay, I've been selling put on this thing here all the way back here since the COVID. Okay, look at this. Since we had the crash of the COVID crash, I've been selling this thing here. Okay, and look at this. During the COVID, of course, I had some unrealized losses, which everyone did. Doesn't matter if you were selling option or holding the stocks. Everyone had unrealized loss here at this time here. You can go way, way back. Okay, look at this. You can go way, way back. All the way back here in 2018, pretty much Trump times during the White House. Okay, all these Chinese trade war, or the Fed tried to increase rate in 2019, or maybe the COVID-19. Guys, look at this. This thing trades sideways. If you know how to trade short put options on this ETF here, this thing here is a cash cow business. It's a cash cow business. This thing here, we're not holding long term, unless if this happens again. This was a free money, of course. Free money made up by human beings. If you know what I'm talking about, this COVID crash here was a man-made. Why? For this rich to get rich. If you knew this thing here, you could have made a lot of money. We almost doubled our account during this thing here. Not just because volatility went to the moon, but because with the interest rate pretty much at zero, guys, you guys can have an idea. With helicopter money, what people are going to do at home? Trade. And this is exactly what happened, okay? But how much, look at this, how much trade sideways from here all the way to here. You have here like what, 4 years of trading this thing. Even if you trade here at the worst case scenario, doing your trade management, you're still making money now. Okay, and that's what I'm talking about, and that's what I tried to show you guys in this thing here, which was better than on the stock. And if someone, for example, okay, let's say someone bought the stock here, IWM here. Look at why now, after 4 years, it's still negative. This person that sold option here and did trade management, trade management, trade management, trade management, trade management, this person here is losing money. And this person here, guys, has a lot of premium in the bag. Plenty of premium in the bag. That's the power of selling cash secure puts and transform cash secure puts here into the covered triangle, to the wheel strategy. And then the sky's the limit. Okay, that's what I'm trying to explain to you guys, or prove my point, should I say, okay? That's what I'm trying to say. I'm gonna explain this to you guys in a second. And this thing here, okay, is the golden goose of everything. This is the golden goose of everything, managing your trades. And what I mean manage it, you make a choice here, okay? You make a choice. Stock trading $100 per share, drop to $90. Am I gonna let myself to get assigned and just hold the shares? Okay, that's cool. I only get assigned if I'm down here 30%, 40%. From here, I wanna hold this thing long term. If it's 10%, 12, 15, no. I'm gonna keep fighting and doing the trade management because we know how to do. Of course, all the trade management, 90% is done before you press the trigger. After, it's just a mechanical things to do. That's it, okay? Am I gonna transform here this assignment here into a cover triangle? Great. Into a wheel strategy? Great. Am I gonna transfer this to a covered call? Great. Or am I just gonna do trade management and maybe get some more shares all the way down here? Guys, the sky is the limit. But this thing here, it is the golden goose when it comes to trading options. Very, very crucial that you guys do pay attention to this, okay? Because this thing here, for those of you that are option sellers, if you know how to apply this with a proper position size and trade management and risk management, this is the thrill, guys. The thrill, which is gonna make you a lot of money as an option seller. Okay, so now let's jump to my TastyWorks platform, because I'm gonna go through with you guys with the moneyness part of the presentation, which is very, very crucial. So the moneyness, guys, is very, very simple, okay? We want to trade cash secure put or naked put with deltas between 12, I'd say, to be conservative to you guys, especially for those of you that are beginners, to let's say 30, okay? I do 45, I do 50, or even I do in the money. But forget this three at the moment. Let's do this thing here, okay? For example, first thing we're gonna do is we're gonna look here at the strike price. We're gonna look here at the expiration dates. Okay, we're gonna look at the deltas. Okay, and of course, if you go through this playlist here, which it is how to trade options, I think I put in the beginning, up here to the right, up here to the left, I don't know. It is in the description below this video. Go and learn, guys, about everything when it comes to place your trades, because when it comes to sell option, you need open interest to be very high and we need liquidity to be very high. I'm just gonna talk about here strike price, delta, and DT, nothing else. But you need high liquidity, high volume, all those good stuffs, okay? Of course, very narrow spreads, all the good thing. And narrow spreads come from what? High volume, okay? But let's say you're gonna trade here the IWM, the ETF that tracks the performance of the RAS 2000 and so on. What we're gonna do is we're gonna sit here in a range between 30 to 60. Let's say, for example, close to 45, 43 DTE, okay? We're gonna come here, we're gonna click here. The 43 DTE, okay, it is expiring. Today's what? 10 of 10 of 2024, expire on November 22nd, okay? That's the first thing first. We define our DTE, which it is 43 days to expiration. Now we're gonna go down here and we're gonna select our deltas, okay? Very, very crucial. Very short, very short. You can learn this, guys, on the option trading course for beginners. Like I said to you, click on the link below. If the stock is, let's say, is down, I don't know, 10%, I'm gonna go for, let's say, 16 deltas, something like that. If the stock is trading at 30%, I'm gonna go up to, let's say, 40 deltas. If the stock's trading at the all-time highs, guys, I'm gonna trade 12 deltas because I wanna buy the stock, but I don't wanna buy the stock at the all-time high. I wanna buy the stock at least the first time at 10%. I wanna start to do my trade management at least at 10%. And that's why I have this thing here. Okay, as you guys can see here, I don't know if I can clean here. Here you go. That's why I have this indicator here. Okay, it tells me that at 7.5%, that's the price. At 12.5% is that's the price. At 20%, that's the price. And 30, 40, 50%, that's the price. And I have the lines here because I made them, I hide the lines, but I know where the lines are. Okay, so when the stock's pretty much trading here at the lines of whatever discount price here might be, I know if I'm putting here like a short put option, or maybe how many contracts am I going to sell. Here, I might sell one contract. Down here, I might sell two. Down here, I'm gonna sell the house and put everything down here, if you get what I mean. Okay? Here, it might be just one, for example, very simple. Okay, forget about this to the right here. It's trading here. Look to the left, the structure of this chart. We might have a support here because this was a resistance once, and then it might hold a support, which it did. Here, 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 and here. These two resistances here become great support 4 times. So here, guys, I'm gonna put maybe 2 contracts. But if I wanna sell, trade the stock prices here. If I wanna trade, let's say here, look to the left. There's no structure on this chart. To the left, I'm gonna put here 1 contract. Just in a nutshell, how we use deltas, okay? And according to the strike price, let's say, for example, IWM right now is trading at 218. Let's say that we want to trade here 100 and let's say $180. So if you go back here to our TastyWorks, if you look here at $180, this gives us, guys, a delta of 5. That's too low. What I'm gonna do is I'm gonna say, for example, let's say if we pick here a delta of roughly $190, $200, let's say a delta of 20. Okay, let's call this 20, $200. Let's make this a round number, $200. Okay, which pretty much here a little bit more than 1 standard deviation, because this is 1 STD. Okay, so this is a little bit more lower than 1 STD. So $200 strike price with a delta of 18. So if you go back here to the chart, if you go back to this chart here, $200, guys, it's roughly here. If we look here to the left, okay, it's roughly speaking, okay, roughly speaking, a little bit more than 7.5, roughly 8%. Because if we get here our ruler, and if you go down to $200, it's roughly 7.79, as you guys can see, okay? This is a weekly chart, by the way, guys, okay? 7.79. That's how much it is, the $200 strike price. So I'm happy. I'm very, very happy to start the trade at the strike price of $200. Why? Because if we get a sign, we're not getting a sign up here, the all-time high. We're getting a sign here, which is roughly 8%. And from here, we can start our trade management. So we define our delta to be, let's call this thing here 20, our strike price, and our DTE. That's the 3 things you need to define in the beginning. Very, very crucial. Okay, if you define your delta, your DTE, let's say DTE between 45 to 60, okay, and then you can apply that rule that I said to you guys, trade the all-time high, 10%, you go, let's say, all-time high, let's say you go 10 deltas, 15% you go 16 deltas, 20% you go, let's say, 30 deltas, and so on. Okay, the more the stock market drops, the more higher I'm going to my deltas. Why? Because I'm pretty much forcing myself to get a sign. Because I want to get a sign on IWM trading at 50% discount. Thank you very much. Because if I get a sign, and if I hold the shares, and if I transform them into a covered strong, if I do get a sign again, I'm going to hold there for the long term. Okay, guys, this is just, it is the golden goose. For those of you that are watching this thing right now, I know I'm describing everything on the screen, but just go back, watch once, twice, and write down the stops, because PowerPoint presentation, this thing is just useless, okay? But you guys get what I mean. The more the stock market drops, the more I want to be forced to hold the shares, because if you don't want to buy SPY, okay, at 15%, what else you going to buy at 50% discount? What else? There's nothing up there. Okay, but just to finish it off, keep this video nice and simple. Define your DTE, define your deltas, and define your strike price, and then come here to the chart, come to the chart, and then ask yourself, look to the left and look at some structure of this chart. It doesn't mean we're gonna take 100% consideration on the structure of the chart, because price can drop below and above with no matter what. Price doesn't care, but at least we have some kind of confluence looking to the left on this chart. And that's where sometimes you can use technical analysis, fundamental analysis as a confluence. That's it. No trading signal. Technical analysis, fundamental analysis, indicators, they are useless. But what you're going to do is, we're going to use them sometimes just to give us some kind of confluence. But what we're going to make us profitable, it is our trade management and how we're going to deal with this thing. If this thing here, guys, let's say the shit hits the fan, if you get what I mean. Because selling put here, put here, and price goes up, even a monk can make money. But try to make money here, guys, when drops like this. That's the times that you're gonna separate ourselves from the kids. Trade management when it comes to selling put. But first thing first, define your deltas. Second thing, define your strike price. And third thing, define your DTE. Okay, and then you want what? You want a high liquidity, high volume, high implied volatility, all those good stuff. Because high implied volume and open interest also come, guys, with very narrow spreads. Let's say 1 point, 2 points, 3 points, and so on. Okay, and of course, get filled at mid price. Always, always, always. Very, very crucial. Okay, and I'll make those documents available to you guys so you can just download and use at your own risk. Because, of course, everything in this video is for education purpose only. But I hope you guys get what I mean. And I hope I have added some kind of value to you guys. And if I did, guys, don't forget, first thing first, click on the link below, download your materials. Second thing is, just go, for those of you that are beginners, go and learn how to trade option for free. The link is below in the description. And third thing is, the only way you can support our work so we can still providing free contents to all of you, it is by subscribing to the channel and leaving your comments and share this video to as many friends as you can, okay? And I really, really do hope I have added some kind of value to you guys this video. Of course, I could have made this thing here in 5 minutes, 10 minutes, but guys, it is what it is. And I hope you guys do appreciate, okay? And whatever you are in this world, thank you very much. All the best. And as usual, happy investing.